I don't have an interest in the DAX because there's too much uncertainty around. I'm not sure what's going on with the tariffs yet. We had some news today. I just want to see if it's going to get worse. There's also some pushback on the fiscal stimulus by Germany. I think the Green Party pushed back a little bit, so I'm just a bit cautious. Anyway, guys, Chris Pulver is here to take over the show, so I will see you all later. I appreciate you all being here as always and being such a nice audience to talk to. Guys, don't get margin called. I think I'll see you tomorrow. If not, I'll see you next week.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Thursday. Welcome back. I am taking a look at a potential play for SPX this morning. Just close out a quick winner this morning on SPX. Debating on how I want to set up the rest of the day. Either we are going to continue to trade choppy inside of this low from, I think, Tuesday or Monday. This low is Tuesday. So either low from Tuesday around 55.30 that holds. I mean, I think the upside, if we have oversold conditions, which I do see a lot of that, if the Tuesday low holds and it holds again today, then there's a pretty good sign that we're at least defending this area. The issue is if we don't defend this low, things get bad. Like that's more pain ahead. That's more, more lows, more fresh lows. I will be looking for some potential divergence. So if I take a look here, everything's fallen off pretty quickly. Typically we do see with a direct slide like this, the market tends to respond with some type of pullback to get back into a center price. So anyway, long story short, I mean, we are sitting at oversold conditions on the relative strength index. I don't have a crossover or anything on MACD for the daily, but it doesn't mean that immediately we just have to pop right up. I mean, the nice thing is at least the pain has ceased for right now, but I'm trying to see if it's going to be pausing here for a pullback. Yesterday was pretty straightforward. You just grab a Fibonacci swing from this high to this low, and you look to see, just some simple retracement levels. I think that's where the market can pull back to. I don't know. We're going to find out, So anyway, hopefully there's some near-term relief and just a little bit of a pullback. Doesn't have to be anything major, but going back maybe 3, 4, 5% to pull back into some previous support becoming resistance. I still think this market has another potential flush lower. It would just be hopefully easier to see a pullback first and then another position to possibly take it lower as opposed to just more unwinding. So if we get SPX going to fresh lows, that's over 10% corrections. If we get the Nasdaq going to fresh lows, that's going to be closer to like 15+% corrections. So, we don't know. But if we make some fresh lows, I will be watching to see, is there divergence on relative strength? Is there divergence here with the MACD histogram? But it's still going to feel like garbage if you've got some pain to the downside, right? So oversold on S&P, oversold on SPY, futures as well. Qs oversold on RSI. Again, this doesn't mean a bottom, but at least we have stalled here for the last 3 days of trading. I think the lows are key to watch. Okay. Lows are key. So I'm doing some pruning right now in the portfolio. I don't mind this trade. I'm actually just going to, I'm going to move this down. So I'm going to put in a broken wing butterfly. I did this morning. This trade is, all right, I'm going to put in this trade for a 50-cent credit and just let this hang out for the day. So it may not get filled. If price is going to defend this low or not even be at the low, it looks a lot better if we get above 56.40. We get above 56.40 and take out this high, then we are creeping back into last week's low as well as this gap. But, I'm trying to make sure, like, if price is going to fall, I've got a little bit of buffer, and I would also have a broken wing butterfly setup where it'd be a profit trap. So this would be the credit. I'm trying to pull in 50 cents. Then I have a profit trap, and then I take on my risk. So it looks something like that. So I do have risk on the trade, but probability profit would be pretty high. Either walk away with a probability of 50 cents, or if price is going to be threatening that level, potentially a profit trap at the end of the day. But I hope the market just wants to go up. Hope's not a strategy, but as far as what we've been dealing with and how I've been positioning, a little stability is hopefully very helpful. Now, in the meantime, I am taking some profits today. I closed out Airbnb for profit. Adobe is looking good for profit on Friday. Intel, I had a good call on Intel yesterday afternoon. I'm not in full profit mode, but we had a big announcement on Intel. There was a new CEO announced. So let's see here. Boosting shares nearly 10% pre-market, closing at, it surged from $20.68 to now up to 24 and change. So really excited about new CEO. I did take a trade yesterday in my YouTube session in the afternoon at like 3 p.m. So it's up right now. I mean, my max profit on the trade, I'll show you right here. Max profit on the trade is $18.50, which if I do a debit of $15.50, so it's $3 is net profit times. So $600 is my max profit. And that would be if I wait all the way till April 25th, which right now isn't bad. Isn't bad at all. I could roll this out since we have a immediate push right away. If we go just on the call side, if I roll this out, I mean, I'm not that interested for rolling it out a week, paying fees, and getting 3 cents credit. That's not really going to do it. If I want to roll it out by a month, so roll it out to the May 16 expiration, an extra 35 to 38. I mean, 35 cents isn't terrible. It's an extra $70 on the trade. Still get it called away at 23.50, hopefully. Actually, this isn't even bad. Let me see. Could I go? If I rolled it down to 23, I get 87 cents. I would be getting an extra like 30 cents of profit plus increasing the probability of it getting called away. That's not bad. It'd be an extra $60. If I roll it here, I go up from a 23.50 to a 24, and I still get 40 to 45 cents on the trade. That's another, I'm trying to think, 40 cents plus another 50 cents. I get about 90 cents more than $180 of profit. Out to May, but I don't really want to wait an extra, I don't know. It's not a bad trade. It's a good problem to have. I mean, I'm debating on, do I want to take $358 now, or do I want to wait 43 days to get the extra, $300? So I don't really have to do anything on it right now other than just kind of think about it. So I guess I'll continue to do that at least for today. I'll think about it. I closed out Airbnb for winter this morning. I'm just going through the portfolio and watching closely. These are ratio spreads out into April. Okay. So this one I'll be watching closely. So April and May. All right, keep a close eye on Amex. Alibaba got a bunch of profit on this one. I'm just going to let this one. These are all out of the money. These are fine. BCS, this is a Barclays. I took some cash secured puts, 12 and 10, had about 90% of max profit, and I'm still over a year away or just under a year away. So I'm just taking the profit. So I did, and I also freed up some buying power. Baidu still hanging on this one with a collar trade and some out of the money credit spreads. Berkshire Hathaway, this one's looking good for full profit coming into next week's expiration. BTI, I took some of my cash secured puts. This is like British Tobacco. BTI is a decent dividend stock. It's up. And the other ones are out to January 2026. I'm going to let those run. Those are up about 50% max profit. The other ones were up about 80% max profit. And I'm just going to take the profit rather than waiting 100 days. So I closed out this one, also freed up some buying power. CB, this one's looking good for a play into, I mean, I'm up 80% of the max profit on this one already. Do I want to wait 64 days? Sure. Let me take a quick peek at this one. CB. This is the insurance side. I mean, that's a big response. So yeah, this one's fine. I'm not worried about this one being a problem. I'll let that one just go full profit. CEF, that is silver and gold. CENX. It's like it's so far out of the money, but it still trades for like a higher debit than I want it to. I'm only up about 66% of max profit, and it's way out of the money. So I will just let that one, I don't know, expire, I guess. CMG Chipotle, no threats on this one. I have a ratio spread. Take a quick peek here. So that trade pulled in 45 cents. It's trading for about 86 to 87% max profit, but looking good for full profit coming in next Friday. That one's going to be fine for next week. Coin. This one I'm going to watch. This is out to the end of the month. So I still have next Friday and the Friday after that. If price can get back above 195, then I avoid assignment. I don't mind the assignment. My break even would be around 180, 189 anyway, if I took assignment. So I think this is an easy enough one to repair, especially if there's any type of rally off these lows. I mean, I think Bitcoin would rally a little bit if the broad market picks up as well. So I'll keep an eye on that one. Costco looking good for some profit. These are buy a put. What is this trade here? I'm just trying to decipher this one. Either a buy. What did I do? Either I did. Okay, I know what I did here. This is a 1-1-1 trade, but it's all fudged up because my 655 has 3 puts in it. So what I actually have here is a 6. So I bought a 660. Change the color. So I bought a 660 put. So that's a +1. And then I sold a 655 put. So that's a -1. And then I also sold a 600 put, which is a -1. So somewhere in there, I need to decipher what this trade actually is. So basically it's this. If price is greater than 660, I'm keeping credit on the trade. So let me try to figure out what that credit is. So there's a debit, there's a credit, there's a credit. And for 862 on this one, so -4.72 plus 8.62. Okay, there's no way this trade's trading for $15.50 credit. There's no way. All right. I'll figure it out. I'm not going to stumble through it, but I do have to figure out how exactly I structure this one, and I'll find it in my tracker. All right, that one's fine. Dell, this one's out to May. This one's okay for right now. That is a bull put spread. Oops. Diamonds, if we are staying above 405, if we're staying above 390, watching those areas closely. DocuSign has earnings today after market. I've got an earnings play in there. I'll keep an eye on that one. EWJ for Japan, Brazil. FCX for copper. FEZ, that's my Eurostox 50 play. FXY for Japanese yen, up a little bit. GLD up, just waiting. Gold still up on the day. Google, I closed out a ratio spread yesterday for profit, and now I've got expirations out into May as my next one. Google at 150. We're trading at 164. Should be okay. Bitcoin related, still up about 4 grand. We'll see if Bitcoin makes a run with the market. Up 340 bucks max profit there. I'll kick around the Intel, see if I can make it better. Maybe it's worth rolling. Maybe. Russell, 190 line in the sand for next week. This actually looks pretty good. I hope we don't go too much lower. There is a potential profit trap here on my Russell trade. So right now, I'm actually up more profit in this trade. This actually might be worth taking off. So if you can see on my chart here, it's $1. So $1 is what I pulled in on the trade, and right now it's trading for 132% of profit. So that means I should be able to close this one out for a small profit trap. And if I do it now, this goes out 2 weeks from here. But essentially, the max profit would be if I do nothing and we are trading around 200 bucks, then this one's just going to expire at $1 credit. If we're trading at 199 or 198 or 197 or 196 or 195, then I have a potential $5 bonus trap on top of that, which is why right now this is showing a slight bigger profit. So for the sake of buying power, I mean, I could, be greedy and think like, okay, good. I hope this comes back down to 190. I really don't. At this point, like the Russell's dropped 20%. I hope the Russell goes up. At these levels, it'd be nice to see that this past resistance becomes support and the market offers at least a near-term relief. You take a look at the Russell here. We've actually been oversold for a while. I mean, this one started to hit oversold conditions right after this giant February drop. Right. So in any regard, I'm looking for this trade to offer up some divergence. Okay. So point is, if the Russell's going to pull back at all, it's probably better for me just to take the bonus profit right now. So I think I'm going to. So I'm going to take this trade off. This one should be closing. So I got in for a credit. It should be closing for a credit. That's the nice thing is I can get that little bonus trap. Yeah, I've got 30 cents credit on this one. Let me see if I can get out of this trade for another 30 cents credit. So 30 cents credit not filling. Let's try 30 on the nose for the mid price. No. 29. Bid price is 25. I'm trying to get just a few cents over that bid price. 29 cents credit. Okay, cool. Anything here on Russell? Yeah, same thing. So this one, same thing. 1, 2, 3. Close this down for a little bonus profit of 28 cents. 28 cents. So I'm going to take the bonus profit there on IWM for this March 31st. Closing 28 cents credit. Yes. Okay. Very good. This one is just own shares. This one, no Russell exposure. This one, here's the 111 for a bonus profit. 1, 2, 3. Fill the 28. Good. Okay, so that's another winner. IWM. So that was $1. So $1.01 credit, and I closed it out for 28 cents. So that gives me a total of $1.29 per contract. Nice little bonus winner there. I'll take it. This one for IWM. 1, 2, 3. Good. Okay, the one out to May, I'm not that worried about. I'll keep a closer eye on that one, but expiration wise, there's no trap. I'll just watch. Any other exposure here? No. 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 Okay. That should be it on IWM. Good. Okay, so we're good there. JD, I need it to stay. It's back up to $42. This one likely gets called away for profit at $40. I could continue to roll it if I wanted to grab the extra income. I've got 500 shares. It's worth it to me. Like anytime I'm at like, 200 shares, 500 shares, 1,000 shares, any little roll, even if it's for like 20, 30 cents, does help. So, staying up above 42 is looking good. This means is China getting another bump to the upside. HSI is still hanging in there. Let's go to Alibaba. Alibaba's hanging in there. CQQQ, Baidu. Baidu's making a nice little run. I've got ownership of Baidu in the mid 80s, and it's covered at 100 and 105. I don't really want it to get called away because I think Baidu could be also running to visit the September highs, which is up into 116. Obviously, a 116 profit target is a lot more exciting than a 105. But if it gets called away, it gets called away. But the nice thing is at least turning upside. FXI hanging in there towards those September highs. KWeb probably has a little bit higher to go. If we have any pullbacks, I wouldn't mind adding some exposure here. MCHI JD up to 41. This one's been crazy volatile. It's up to 46 and change. I think I just need to stay above $40. I might not get too cute with it. So my break even on this one is around $35. 35.42 is my break even. If I get it called away at 40, 68.70. So if I roll it one more time, maybe I increase that up to $7,000 in profit. But like I said, I don't want to get too cute with it just in case. I would say on the high side, if this goes up into $47 to $48, that's fine. If I was uncovered, I would be wanting to take profit in that level anyway. Okay, Schwab dividend, possibly a good bounce opportunity here. Schwab growth, I wouldn't touch this one right now. It's just pulling back. I will say this though, if Schwab growth falls down to a yearly moving average, this is an ETF. It's a Schwab instrument, but if this thing came down to like the low 20s, I would buy and hold this thing for years to come. Especially, these highs at $30 or $29. If this thing came down to like $21, you get $8 a share just on sheer, percentage growth. That move 38%. I'd gladly put in, I don't know, $5 grand, 10 grand, 20 grand, something like that allocation. I think that upside is pretty decent. So not yet, but I'm going to wait. Previous resistance back here, right? Previous resistance here. See if it comes down to the low 20s, and that's probably the next spot that I dollar cost average. I do have shares of it already. So if this is a correction and it does make fresh highs, okay, fine. I don't get the entry that I want. Okay, heat map today. We'll take a look. Costco has dropped to the 200 moving average. Okay, one thing that looks pretty enticing about Costco would be when it's done, and I don't know where this level is. I honestly don't. This is why I kept saying I don't really want to be a stock picker this year, because if this momentum is going to get nasty, look, Costco looks good at this 200 moving average until it doesn't. Because if this goes flush, dead cat bounce, and then more to come, okay, and how does this happen? If the consumer is looking worse, okay, if consumption will be scaling back, if recession fears are growing, I don't care. This has been a fantastic run at Costco. This thing is way overpriced and way overvalued. I would not mind to pull back into like the 800 zone or lower, but I was kind of hoping that once they get over $1,000, they'd be looking at a split. But I don't see it. And until they do, I'm not that interested in allocating 100 shares at a stock that's $900. So I picked my options pretty carefully. I've got some plays down here into the 600s. I put on some call condors and bear call spreads and bear put spreads. That's been fine for the recent month. But it's, I don't know, maybe not a bad spot to dollar cost average, but I would not love it. If I put in a small allocation and they do like a 10-for-1 split, there's a chance that if I at least bought, 10 shares of this, and I'd throw over $1,000 or so. I mean, that wouldn't be too bad if they do a 10-for-1 split, and all of a sudden I have 100 shares. Now I control options. So it's enticing. Correction wise, Costco is off the highs by about 16%. So I don't know. I'm going to see if it falls a little bit more, or I'll consider maybe adding something. Okay, Walmart added some collar trades yesterday. We're bouncing off the 200 moving average, so I did protect my my put. Now I have a new collar that's a 100 by 65, and my break even's in the low 90s, or like $87, $88. Nike still have a $65 and $60 puts. Let me check on those really quickly, actually. Johnson & Johnson, this one's up about 54%. Coca-Cola, I might look at a roll on this one. This is out to April, but I might consider rolling it a little bit further, since it's, I'm $4.65 in the money on this trade for my covered call. So if I can roll it, get another, maybe 30 cents, 40 cents, 50 cents out of it, it might be worth it. If I can roll it out in time and up in strike price as well to add to my bottom line. Let me take a look at this. So if I go quick roll, if I go out, let's say from 35 to 64 days, I have a feeling this is not really going to roll up that much. So I can keep the same strike price. I mean, it's not a bad trade. I roll it out an extra month, I get 70 cents credit. That's worth it. That's worth it. I don't have a ton of shares of this one. Could I roll it up? This one, it might be worth it. If I rolled it up in strike, and then how far out in time do I have to go? Probably further than I want, to be honest. August 15th. Let me take a look at the chart real quick. KO. I mean, we could backfill this. We could fill this gap in. I think I need to keep it around 65, to be honest. So if I roll it out to August, keep the strike the same, I get $1.70 at this. This is worth it. I'll just roll it out farther. Coca-Cola, I think, is pretty defensive. I don't see us going dramatically lower. So choices. I mean, if we came down to the low 60, I don't really want to just sit here and sell a bunch of premium on Coca-Cola. But it still offers a 3% dividend. It is super low beta. So even if the market overall is falling, like Coca-Cola is probably not going to do too much from a troubling drawdown. It will be relatively calm. So I'm comfortable going out to August, keeping the strike the same. Grab $1.70 out of this one. It's not bad. Just more time. I go from a 35-day expiration out to 155 days. So I add time to it, but that time to me is worth an extra. I mean, I have how many shares of Coca-Cola? So Coca-Cola, 1, 2, 3, 4, 5, 600 shares. Oops, 600 shares. I mean, it's an extra $1,000 if I'm waiting. It's okay. Can I wait 100 days to make $1,000? Sure. So I think I'm gonna roll it. So Coca-Cola. I'm gonna roll it. So I'm just gonna take the 65 call, roll it out to August 15th, keep the strike at 65, and grab $1. See if I can get $1.70. Minimum should be about $1.60, but I'm just gonna penny it down until it gets filled. $1.69, $1.68. $1.67 got filled. Okay, good. So $1.67 is my new roll. Okay, Coca-Cola. There we go. Rolling out to August 15th. And that's still a $65 sell call for $1.67 credit. So that will lower 63.07 minus $1.67 puts my break even at 61.40. Okay, so that's not too bad. Get it called away at 65 on 600 shares. I make 21.60 on Coca-Cola. So, all right, I will roll this one out. So 65, quick roll to August, and $1.67 was the fill. Filled no problem. This one here, 65, quick roll, strike the same, out to August, $1.67. Coca-Cola. Okay, working through it. No exposure on that account. No exposure on that account. And this one, 65, roll. Okay. No exposure. No exposure. No exposure. And Coca-Cola here. No exposure. That one got closed out already. Okay, good. That's an easy fix. Las Vegas Sands, fine. Microsoft closed out. This one's looking pretty good for next Friday. So $2.40 credit, trading currently at $140 profit. So 58.3% max profit. I'm going to let this one go. This is next Friday. If Microsoft stays above 370, I pull in $2.40 credit. There is a potential profit trap income as well. If I can show this trade here, doesn't really show up the way I want to. Let me see if I can zoom in. That gives you a little bit of idea. A little bit of an idea what this thing is doing. So right now, this is current price on Microsoft. Okay, this area here. So anything from current price or higher is going to be worth $2.40. If price falls a little bit lower, I then get into a $5 profit trap before I take on any risk. So potentially, if we drop a little bit lower, I don't really want it to do this, but if it did drop a little bit lower, I have instead of a 240 winner, I could have $7.40 would be my max, which is still pretty good. Obviously, that's a big increase from what I think is a high probability into a bonus profit, but that would also entail probably the market sliding a little bit lower if that's the case. So summary is this. I'm not going to do anything because we're trading at 382. My line in the sand is 370. My profit trap is between 380 and 375. So I will watch that one on April. I'm not really worried about that expiration, but this one I'm watching very closely. Okay, MSTR, still mostly watching the collar positions here. Yep. This one is going to be full profit. So that was $1.90. It's trade. I mean, I could close this one down pretty much right now. So $1.90. See if it closes for like 1 cent debit, 2 cents debit. If it does, great. It doesn't. It does. All right, that was easy. Take a look at MicroStrategy on some of these. MSTR 111. Okay, so this trade, yeah, I'm going to close this one down for 1 cent. So $1.90 credit, close it down for a 1 cent debit. Take that profit. Awesome. The good thing is that shows liquidity in this as well. I mean, oftentimes a 1 cent debit, that's trading some pretty liquid instruments, which I'm happy considering it's super volatile. But this also frees up some buying power too. So this is a collar trade. This is a collar. This is a collar. And then I have a bull call spread. So this trade is my 111. Taking majority of the profit right now. Not credit. I want a 1 cent debit. Filled. And that also should get me some buying power. That's a bull call spread. This one's bull call spread. Bull call spread. Just has some shares. This one should have the 111 there. Okay. Closing this one down for 1 cent debit. Okay, that's closed out. No exposure there. No exposure there. Just the bull call spread. Okay, that is some MSTR. Keep going. Micron. This one's out to April. It's a ratio spread. Nasdaq. Watching this one for a March 31st. This one should be good for at least $1.10. Potentially, I've got a hey now. This one actually might be looking pretty good. A $25 profit trap, which could give me, this could be pretty interesting. This could be a $1.10 income trade with a $2,500 profit trap. Now, we're almost there. So right now you can see it's still, there's a lot of volatility in the option prices, but by the time this thing settles in 18 days, right now this trade is up around $1,000. So what I might end up doing, and I don't know if this is going to mess up my buying power too much, but this debit was only, this is what's crazy. This is only $1.50. This was $1.50 out of the money bear put spread that is right now trading for over $1,000 profit. So let me make sure that math is right. 85 by 83.50. Yeah, I mean, this was a $1.50 debit for a $25 max profit, and right now it's showing about $1,000. Let me see what this is trading for right now. $1.50 trading for $11. Let me see if I can get a $11.50 out of this one. That's a nice little winner. That's a huge profit trap. It does reduce buying power a little bit, but I'll take the $1,000. Still keep the probability that I have a 50 wide credit spread that goes out. I mean, 19.3 would be another. Let me check the option chain here. 19.3 is that's not super awesome. That's not super awesome. We could potentially be. Oh man, are you kidding me, dude? This market's saying that the NDX could move potentially 1,800 points. Whew. All right. Yowza. I guess, man, 19. Maybe this isn't as good as I thought. Well, 19.3. So it's pretty much like stay here. This is out a couple weeks. If the market stabilizes, like I said, most important thing is we stabilize off these lows, and then this trade is okay. So I'm just going to hang in there for right now. Let this trade work out. There is some risk on the trade. Got to be willing to take that and accept it. But otherwise, I want to keep that $25 max profit, because if I do end up taking a sting on this one, it makes the trade more manageable. So I guess I'll not manage the profit trap really. If this was way further out of the money and it looked like the probability of profit at that 19,300 by 19,250 was high, then I wouldn't touch it. But right now the probability of profit's around 55%. It's not really what I like for a, an out of the money credit spread. I don't want to see a 55% take profit or probability profit. I'd like to see a 75, 80%. So I'll keep that one running. Netflix, this one is a butterfly spread. It's a broken wing butterfly, actually, out into April. Otherwise, this one is going to be a 1-1-1 looking for profit next week. This should be a 1-1-1-1 there. So this trader pulled in 278 and is trading for about 98% of profit. I can go ahead and close this one down. See what this is trading for. 15, 16 cents debit. 99.5% chance if I don't do anything, this can be a winner for next week. Unlikely Netflix is going to drop to $700 by next week. I don't think there's earnings at all. Yeah, it's way down here. So this trade was taken originally when we had this first decline. We had this decline. I added this trade. So 256. Max profit 278 and is trading for 265. But it's showing, let me see if I can get out for a cheaper debit. 1, 2, 3, 4. So 278. So it'd still be 260 and change if I close it out for 15 cents. See if this will fill. Nah. 278, close it out at 258 if I go 20 cents. Close it out at 15 cents. That's not bad. All right, taking a winner on Netflix. So 278 credit. Close it down for a 15-cent debit. Nice winner there. Netflix. 1-1-1-1. 15-cent debit. Come on. What the heck, man? Whatever, dude. All right, I don't really need to do anything in this trade, but it's just one that I want to manage. So this was 252. So right now, I mean, this is showing if I wanted the profit that I see on my tracker right now, I should be able to close this out for like 10-cent debit. And it's not filling, so I'm just gonna let this one go till next week. Okay. Yeah, let me just give me a few minutes. Okay. Someone's asking about FX positions. Sure, just give me a few minutes. Nike, this one's fine. This is totally fine. I can let this one expire for profit next week. Nike's looking good for a profit next week. That was on the initial news, like Nike sucks and the stock market killed it and then it bounced back. So there's some resiliency. Odds of this one being a profit next week pretty high, 85 and 95% probability of profit. There's still a lot more time decay. I'm only up like 36% of my max profit. So I will just wait until next Friday. NVIDIA trading up to 117. That's fine. Own shares, got the collar trade, have some ratio spreads, but April's the next expiration there. Oracle, this one's out to May. This one's okay. Pfizer, Palantir, these are looking good. These will be fine. No pressing expirations though. PSP, that is for private equity. Nasdaq, this trade is looking okay. Right now, $1.55 is my potential profit. Right now, it's trading for about 120 bucks. And it also has a bit of a profit trap on top of that. So this is not next Friday, but the Friday. This is the end of the month. So this is Monday the 31st. Let me check the option chain here on the 31st. Yeah, that's a 111. I mean, probability of profit in this one remains pretty darn high. That's a 15 delta. We're sitting at around a 87% chance of profit on that trade. That's good. I'll keep an eye on that one. Everything else is into April and May. Equal weighted. I'm just going to dollar cost average into that. RSP's equal weighted. Schwab dividend, Schwab growth. SkyWest airline stocks just getting bashed. Plenty of time in this trade though. Not really worried about it. There could be an assignment here early on, but my expiration is out to October. Has anyone seen airline stocks recently? So SkyWest. A lot of this was, plane crashes certainly don't help. Terrible news doesn't help. Tariffs don't help. High gas. I mean, gas prices right now are lower. So that's not really an excuse to see the airline stocks go down. But SkyWest has dropped 41%. This thing has been a monster since 2022. Between the COVID lows in 2022, I mean, this thing has gone up a ridiculous amount. Like the best performing airline stock ever in the world. Like 770% is insane. But we have pulled back 40% in a heartbeat. Delta, same thing. Look at Delta, just falling off a freaking cliff. This is pulled back 37%. Now, all I'm looking at is I don't think this is something I want to try to catch, right? I mean, maybe there's a trend line there. Maybe this thing's overextended, but I would rather wait and see, like, can it fall back? Can it fall back? Can it fall back into any of these levels? Because I would gladly position for longer term Delta there. I mean, I could be wrong. Like this might stop the bleeding and start to go back up, but I'm not trying to catch a falling knife. It's like if it's in a bargain area, then I'll take a trade. But AAL, same thing here. American Airlines just getting smoked. This one, fortunately, was already in profit. I don't have any exposure outside of these. So this is $8 puts on AAL, and we're trading at 10.85. So I mean, $8 puts are way the heck down here. I don't necessarily think we're coming to fresh lows. I hope that we're not. So I don't really have to do much on these trades, but that's kind of it that I have for exposure outside of SkyWest. And then LUV, not as bad, but still kind of can't get off the ground. I mean, I would just watch chart alarms down here in the low 20s. JetBlue just can't get off the ground. No pun intended, but yeah, I mean, I'd like to see this one. We just had the merger, like Spirit Airlines and JetBlue just kept. The merger was getting all excited, and then all of a sudden the market gets excited and prices it in, and then it just fails. So we're just hanging out around this like $4 to $6 zone, which kind of sucks. And then UAL, United Airlines, one of the best rips we saw in 2024. This one was all by itself up around 200%, and it has pulled back so quickly. 40% pullback. Not touching this thing. I mean, I think if we come back into these levels again, sure. I'll revisit this whole notion of like buying airlines cheap. Till then, don't care. All right. That gets me to silver, still looking good. SMH, this one's out to May. This one's fine. SPX, watching those key levels. SPY, watching key levels. AT&T, got a bunch of profit on this one as well. Showing 101% of max profit. Now, what did I do in this one? Sell a put. I bought a call. Is this thing uncovered? Yeah, I'm up 120% on that call option. Okay, I might take some profit at AT&T. Maybe. I'll come back to this one. I mean, it's good. Up $1,700. Who doesn't love some profit? The rest of them, I mean, we're trading at 26. This is a leap. This one is a leap. This one is a leap. This one is a credit spread. Nope, these are puts. Sorry. So these are all puts. I just sold a bunch of puts on AT&T, and they're looking great. These in particular, up 92% of max profit, 87% of max profit. I can sit here and wait another 100 days for it, or I can just take the profit and maybe close out this call, and that would give me a nice little chunk. That'd be 289. So we're up 289 plus 890 plus 310. It's $1,489. Also, because they're puts, I get some buying power back. So what's my max profit here? 71 cents, $1.94. So 265 on those. So 265, and it's trading for $0.25. Take the profit. 265. I'll take 230. Let's go above the mid price just by a little bit. All right, screw it. I'm not going to get a bad position. Now in this trade, $22 call, I paid $236 for it. And right now it should be trading for probably $5, almost $6, almost $6. Thought I said 100 and something percent. So 520 minus 2 what? $520 minus 236. Minus 236. Ah, okay, that's right. Yeah, 120%. That's fine. Do I take the profit on AT&T? Where are we trading at? Yeah, I'm gonna take some profit there. On a call option, at least the puts and stuff all look fine, but on a call option, I'm just gonna take it. Taking the profit. So 520. See if we get a generous fill here. Of course not. Oh my gosh. You can only instruments of 520. Fine. Close at 520. So AT&T, call. Close at 520. I love how it closes me at 521. Close at 520. Taking a winner there. All right. Almost done. And then we'll get some top-down analysis going here. AT&T. Closing that call out for a nice little winner. So that was a 2. $230 debit for a 520 credit. Nice little winner there. Anybody else have some AT&T? This one just has shares. Fine. Okay. Almost through the list. The puts look fine. I might still massage the cash secured puts that I have out to June for some profit. TKO looking fine for April. That's a ratio spread. TLT pulled back a little bit. Still going to manage this one up $1,100. Tesla trading at 236. This one got to keep a close eye on. So if Tesla's not above 255 next week, I'm going to take an assignment of Tesla. I don't mind it. I don't love it, but I can repair it. So this might be something I need to track closely next week. Yeah, I'll be watching. Hopefully we see a rally. I honestly like this one to get out of trouble and not have to take the assignment and then give myself a little bit more time on it. But 255, 250, and 255 out for the next 8 to 35 days. Those were intended to be some income trades on Tesla. UNG. This one is up some profit, but still going to watch natural gas. Uranium, pretty gross, but fine. It's just range. XLC. This one expires next week. Should be, I mean, it's trading for 93% profit right now. Could this trade? I think I'll take profit here. I'm up 93% of max profit. There is a little profit trap in here for an extra buck, but not trying to be super greedy. Max profit's $110. This 55 cents credit, what's it trading for right now? 4 cents debit. If I get out of here for 5 cents debit, it's a sector, not closing. Maybe this one's better if I just let it marinate over the weekend. I'll manage this one next week. Okay, I'm gonna put that one on the radar. XLC for a 1-1-1 trade. XLE. This one expires at the end of the month, 83, 82, 81. High volatility on that one, but should be looking at about $1.43 of income. We'll see what price does. And then XSP is coming into end of month, watching some key levels on XSP. All right, that gets me through A to Z. Appreciate everyone patience with me, just kind of walking through that, closing out some trades and managing positions. I did free up some buying power. I pulled back about 60 to 70K in buying power, which isn't too bad. And now let's talk quickly top down. So we're still choppy for the day. We haven't taken out the lows yet. My broken wing is still not filled. I don't think, at least. Took some quick profit this morning on SPX. Nope, still trading for 12 cents when I'm looking at a fill for 50. Son of a biscuit. Yesterday I had 2 nice trades here for $1.10. I was trying to get a little generous fill this morning. It's just not there yet, and it may not fill. That's fine. So we're red on the day, but not taking out Tuesday's lows. That's really going to be what's kind of critical for this week, is not taking out these lows, right? Not taking out these lows, or if we poke the lows, we get back above them. You know, I can see the market manipulating a little bit. So for futures traded out there, I mean, you're accustomed to that stuff, right? Where the market comes in, tests lows, test these levels. That could be like little liquidity sweep, and then all of a sudden we pop back. Doesn't happen as much in stocks and indexes, but the market can clearly play some games. I think the key here is that we don't close lower, okay? Especially going into this Friday, tomorrow, to end the week. We don't really want to see price closing lower, okay? So if we get a little relief rally, that is good. I am wondering if this is a little tiny bullish pattern. Maybe it is, but the market's clearly figuring it out. But if it takes out the low, we've got some more pain ahead. But taking out the low, if it pulls back, that would be that little bit of divergence, maybe like a little bear trap. So just because the percentages and the corrections, the technicals look pretty decent. I still wonder how bad the sentiment is, which should have printed today or prints end of day. I mean, look at this. So 226 was the 1-year bearish high on sentiment. Right now, this is crazy. This is crazy. Like how consistent and how bearish this market actually is. This typically is a contrarian indicator. So this to me is showing if there's like record amounts of put buying, you don't see that crowd rewarded very often. So we are getting some bearish extremes here, but yet we're not seeing price. Price is not going the other way, right? Like price is stalling at these lows, not necessarily going back up. So I'm curious if we have that bit of a sentiment swing where things kind of ease a little bit, or this is just a nice contrarian signal where everyone's bearish and the market just decides to go back up. So anyway, we'll see. But this is some pretty wild stuff. If you take a look at the fear and greed index right now, again, the contrarian to me, extreme fear. I mean, Buffett's famous saying, buy when others are fearful, sell when others are greedy. When I'm seeing extreme fear, it's difficult to time. It may not be perfect, but at least in the near term, I think we could have some, some dips. Okay. We've got extreme fear in market momentum. We've got extreme fear in stock price strength. We have extreme fear in price breadth. We have extreme fear in the put option. So put call options. So puts extremes, like they're not crazy back to like where we saw it August, like August 5th when the market bottomed out. Everyone was just buying crazy amounts of put just in case, and ended up being like one of the strongest bottoms of the year. Back here in April, same thing. We had a 5% sell-off in the S&P, 6% in the Nasdaq. Everyone's buying puts at the bottom. So we're not quite up to those extreme highs, but man, I would not be surprised to see with record-breaking like put volume that extreme fear is going to be kind of the opposite trade. Market volatility, fear-based, safe haven, extreme fear, junk bond demand, extreme greed. That's interesting. Junk bonds, high yield versus investment grade. But okay, we're finally starting to see some pretty big shifts. And when everyone's crowded out on one side, I tend to think that it's wise to position the other way. I know. I mean, it's not perfect. I mean, look, sentiment itself is not a signal, right? Sentiment is not a signal. So this is probably more of an anticipation trade than, I think, I don't know if it's George Soros or Druckenmiller saying where it's like, I'd rather step into the game after the game has started than, walking into something too early. So it was some baseball analogy where it's like, before the game has started, I'd rather, play the game in the second inning or something like that. I don't know, whatever. I'm paraphrasing. Point is, at these lows, anticipating these lows, I don't know if this is the low. I kind of would think that it is. I mean, I spent weeks and weeks and weeks planning for this market to correct, hedging for this correction, and that was good. So a lot of good things did happen here as far as making some gains on the way down. However, the velocity in which it fell and how one-sided it was also changed a lot of option prices aggressively. So, for my ratio spreads and for my cash secured puts, I mean, those were out of the money plays that are now a lot closer to the money. Those deltas changed quite a bit, and those option prices traded quite a bit as well. So, point is, if we are going to hold here, it would be kind of nice. So, I mean, and the wild thing is, even going back to like 2022, I mean, I guess if you want to look at like how bad could it get? Well, we obviously in 2022 had a nasty flush. That was a 12% drop that then pulled back a decent amount, right? So could it be that? Sure. But I don't see this market dropping like 15 to 20% without having a pullback. Go back to, I mean, are we having a COVID crash right now? I don't think so. Are we having a Volmageddon event right now? Not really. We've had persistent VIX. Are we going back to a great financial crisis? I don't think so. And even that was not a straight flush, right? I mean, when this thing started to top over in 2007, it's still sell-offs. I mean, we went down around 5%, pulled back, right? When we had the nastier flushes, this went down around almost 9%, then pulled back. This was one of the worst flushes here. We go from this high to low. That's down about 16%. We still pulled back. So point is, I'm watching, and hopefully we have a little bit of a relief just in the near term. Otherwise, I'm going to be mad. What are the buy levels? I mean, probably low 200s. I mean, and Tesla it's got to be looked at as a long-term trade. Everyone knows it's volatile. Everybody knows Tesla's volatile. Okay. So, I mean, I don't mind this like, low 200s as a bite. And then the rest would be, if it came down into like the 50s and 60s again, I would buy. I'm not going to say I'm going to load up on Tesla, but I would buy it for the long term. So that's what I'm saying. Even though I don't want the assignment here, I do think the ability to repair the stock is very straightforward. So If I own the shares, it would be owning it around like $248 or so. And even like I don't know, even an in the money call could probably repair this thing for $500 to $1,000. There's enough premium in this trade that I could protect some type of profit on it. So, but I also don't want like all these trades to be assigned either. So I'm just watching carefully. But if it was low 200s or in like this gap here in like the 150s, that is a ridiculous fail on Tesla's stock price. If this thing comes all the way back here and pulls back 69%, holy crap. But that's what makes a market. Things are nuts. However, if we have a 50+% pullback, we fill some gaps along the way, this would be an interesting spot to see if the market can stabilize this low and then work its way higher. So I think for me, the probably biggest threat that I have on Tesla is that my timing is off and I got too, I guess too aggressive on the time. If I'm out to April or May, we have any type of like seasonal rally, these are probably going to be good for income and I'll still have one assignment that I'm going to, repair. Okay. All right. Let's talk currencies for a second. So today we have JPY on top and dollar, pound. Swiss is dropping a little bit, which is good. All my Swiss pairs, I'm just kind of hanging on to those for right now. But not a ton of currency volatility on the vertical axis. But I still like the positions that I'm in. Let's go Aussie CAD. Let me check one thing. 1 p.m. Yes, I can. Okay, Aussie CAD fine. Aussie Swiss just hanging in there. I've been scaling in since these lows at 56. 56, I did get like one position at 55 and 54. I did get some zero positions in when this crash happened in 2024. And that's it. And then I'm still prepared to kind of buy it down to that level if needed, but it's just going to be patient, keep the trade sizes small. Most of my positions on Aussie Swiss, if we're back above this level, I've got a lot of profit above that level. So this profit target, holding out to be a little bit more greedy out to like 6,000. Those are big payout levels if I'm willing to show the patience. But look, this is a pretty easy trade. You have a low, you have a high, and this thing is just showing a channel like so, right? So we're going up, we're going down, we're going up, we're going down. I still look at this as if you dollar cost average into to Aussie Swiss, eventually this becomes a trade that is going to pay out hopefully pretty well. Got to be patient. This literally might be like a 3-year freaking experiment for me. Not experiment, more like a 3-year investment. But it could be very, very lucrative. But that's what I see on the technical side. Aussie New Zealand, flat, Aussie dollar, flat. I'm out of that trade already. New Zealand dollar, that's break even. Dollar CAD, still garbage. Dollar Swiss, if it pulls back lower, 86 or lower, I'm going to buy more. Dollar yen, I just don't love it. I'm trading FXY and I'm out of 6J, which is my Japanese yen futures, but just watching. Get some levels lined up here, 5,500. Still have that SPX trade pending at 50 cents. That might end up getting filled today. We'll see. Still watching the lows for the week. Lows around 55.27. Let's see what else. CAD Swiss. CAD Swiss bounced beautifully off the lows. I like that trade a lot, actually, going back into these highs around 64. If this is a double bottom play, we get back to the center highs. That's target 1, but the best move would be that you double this up and go here to target 2. Again, big opportunities. I'm still bullish in this thing towards like 7,100, but a lot of my profits are below this level here, below this level here. So if I get to like 66 or 67, that is a big winner. CAD yen, watching those lows carefully. Just be careful on the yen crosses. I say that all the time. I mean it. Euro Aussie finally started to show some signs of topping. Again, this was a ridiculous run for over 1,000 pips. And, I just wasn't surprised we saw a little bit of an interim top, but I'm not trading it. That's just jumping in front of a rocket ship. Same thing here. It wasn't surprising that we had a pullback, but you got to be just watching that thing 1 and 5 minute charts to catch a top on that. Euro Swiss, hopefully still pushing up towards my 98.80 profit target. Euro Pound is back up to the 200 moving average. We had a nice little pop on that one for some profit. Euro Yen, that was all Euro related, not JPY. Euro New Zealand, same thing like Euro Aussie and Euro CAD. Pound Aussie, let me go Euro Dollar actually. Euro Dollar, I don't know. It's in a spot I don't like this spot. If you were long above 106, you had a nice little squeeze. If you're looking to do anything here, this to me is just noise. I have no idea if this wants to go up to 112. I have no idea if it wants to pull back to 106. So I don't think this is a good spot to be doing anything. A pullback, however, a pullback that stays supported in this 105, 106 zone, I think that looks good for a retest of the same high or possibly a run into 112 if the dollar is going to continue to get weaker. And as I said on the dollar index, if the dollar comes down to 101 or 100, there's still some room for the dollar to get weaker, which means euro could benefit from that as well. Okay, pound crosses. No top yet on pound Aussie. Just, again, I'm watching for some type of pullback because it's been just a mean run from 97 to, it's been a 900 pip move. Pound CAD, ridiculous. Over 1,000 pips. Pound Swiss, still bullish on this one. Pound New Zealand, I think a pullback is coming, but do not call the top here. Who the heck knows? So any type of topping pattern, okay, maybe a swing trade to correct, but I just wouldn't be fighting this stuff. There's something going on here where your euro is stable, pound is stable, your Asian related pairs, Aussie, New Zealand, commodity based pairs, they're not doing well. CAD is down, Aussie down, New Zealand down across the board. They're not doing well. So I would not fight that momentum. Euro or pound dollar, pull back into the 2,700 zone, maybe have a bounce. So if it pulls back in here, trend line, maybe there's more upside. But again, watch the dollar index. New Zealand CAD, still fine. I'm just leveling into this thing all day long. New Zealand Swiss, leveling this thing all day long. New Zealand Yen at the lows. This could be a pretty nice level. If we start holding this support, getting maybe on the right-hand side of this trend line or just kind of carving out a falling wedge here, this New Zealand Yen may end up being a really nice, asymmetry, high reward to risk trade. Maybe, but I want to see it kind of structurally play out that way. And that's it. So that's a quick run through currencies, a lot of stocks, comb through the portfolio. I'll wrap it up there. So we'll see if today holds the lows for the market. We still haven't broken this trend line, by the way. So as excited as I might be, I think we could have a pullback. Look, sentiment readings are really extreme. We're extreme bearish, we're extreme greed or extreme fear, but the market doesn't really have the proof and price to go the other way yet. CPI data was improving today, this week, and PPI data was improving today, which is fine. There's nothing major tomorrow. We have the Fed next week on Wednesday. I'm curious if the Fed says or does anything that allows the market to go up. High dividend stock, MO. MO and BTI are my favorite dividend stocks right now. They're going up. They're defensives. They're things that people are always going to buy. It's in the dirty sector where it's tobacco. That's I don't invest in ESG. I invest in what I think can make money. So MO is 6 to 7% dividend. BTI 6 to 7%. They're fairly low beta. They're non-correlated. So I do like those stocks. BTI, as in Bravo Tango India. Okay, have a good rest of the day. See you soon. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.